Yeah. So the transaction was goods costing 1500 rupees destroyed by fire. Yes, please.
If it costed us this much, then will it be purchases for us instead of sales?
You are absolutely right. I would have actually told that later because you pointed out. Let me deal with that. So we had goods with us, and it is destroyed. Have we sold it now? We haven't, right? Because if we would have sold, how can we have the goods? It's as clear as that, right? So instead
we
of
get the money back.
Sorry, come again.
Like in this transaction, the goods is going out of the company, but if it was sales, money would have come in. But since it's being destroyed, it's only purchase.
Purchase. Yes. You're right. Now I'll stress a little bit more on that, but let's figure out the other aspect first. Then I'll talk about it a little more. Yeah, other aspect. Can you guys figure out what is happening?
It's like depreciation all at once.
So see, depreciation, the concept, I got it. What you're saying is absolutely correct. But you will not call it depreciation, right? Depreciation is solely for the fixed assets.
Okay.
Depreciation is solely for the fixed assets. Like I said, phone, machinery, building. When you use those, the wear and tear happens. But I get your concept that something, we are losing something. You're right. Expense. That is an expense we are incurring, isn't it? There is a loss that is happening to the company. That is one of the aspects, isn't it? So that loss, I will name it as loss by fire. That is expense only. So one of the aspects is, the goods that is being destroyed, goods, and the other aspect is the expense, which is loss by fire. A loss we are incurring as of today, which is the expense only to the company. The name is loss by fire. Now, when I say goods, I didn't say sales or purchase first this time. I said goods. Definitely you will agree that goods are going out. I mean, goods are being destroyed. So definitely those are going out. Oh, shall we say purchase? Shall we say sales? Now, on the day the the fire happened, do you think the goods will be recorded as a purchase or as a sales? My question to you is, I'll repeat that. On the day the fire happened, do you think the goods will be recorded as a purchase or as a sales? So I'm recollecting the day in which we purchased the goods. On that day, what entry we will have entered?
Would have entered purchase only.
Purchase only, right? Other aspect you forget about, definitely purchase, right? So after that, we have not sold yet. Then what has happened is we have now the goods are lost by fire. So on the date of the fire, which account is representing the goods? Purchase account, right?
Yeah.
Not the
other
sales.
aspect is cash.
Or it can be cash, can be creditor. If we have paid, then cash, or if we have not paid, then creditor. It's a good thing that you can go directly to the entry without going through the aspects and types of account. That's awesome. Once you actually practice a lot, that happens. You can skip a lot of steps, quickly jump to the journal entry. However, I'm not focusing on that now. So my point was, we definitely know that the goods are going out because goods are being destroyed. Now, whether should we name it as a purchase or sales, that's what I'm determining. So for that, what I'm looking at is on that day, which account is representing the goods. So I can see after the purchase, the sale has not happened. So definitely purchase account is representing the goods. So I will name it as purchase only. Does that make sense? Any doubt in that? Okay, I'll take that as a no. Let's go to the types of account. Loss by fire, what type of account it is?
Nominal.
Nominal account, perfect. What are the rules?
Debit expenses, credit income.
And credit gains. And here it is definitely expense because I have repeatedly told this is an expense only. So this is a debit. Now purchase, what type of account it is?
Nominal.
No. What does it represent?
Real.
Oh yeah, goods. Real.
Yes. Well, is it coming in or going out?
Going out.
Yes. So real account, debit what comes in, credit what goes out, it is going out. So it is a credit. So the entry definitely is what? Loss by fire. Account debit to purchase account. is 1500. On the next day, we get to know that there was an insurance on the goods, and we have actually received 1,000 rupees because of that. Very simple. We had insurance on the goods. We have received 1,000 rupees out of the 1500 loss. We have received 1,000 from the, sorry, we have not received. Rather, the transaction is insurance claim admitted, meaning thereby we can receive. We have not received on that day. Now, having that said, what are the two aspects in it?
Sales.
Okay. Other one? Insurance. Okay. Anything else?
The person who's claiming it.
We are claiming it. The business is claiming it.
Okay.
Yeah. Anything else, guys?
Cash?
Cash? No, we have not received. So I'm not even writing that. As I told you, because I'm giving the explanation, because I know that language is a little complicated. So I'm giving you the information that we have not received the cash. So because it says insurance claim admitted, it doesn't say insurance claim received. Had it said insurance claim received, cash would have been one of the aspects. Because admitted, so we have not received yet. The insurance company had just admitted that, you know, you this much of money we will pay. So we owe this much of money to you. Insurance company has told us, the business, I mean. Yeah. Any other aspect?
Anything like insurance receivable or something?
Okay, that's a good one. Insurance receivable. Who does it represent? Can you say? Just like, you know, debtor represents the person from whom we are going to receive the money, right?
Yes.
Here, insurance receivable represents whom?
Bank?
Insurance company. Insurance company, right? They will pay us the money, right?
Yeah.
Yes.
Yeah. Yeah. Now, anything else other than these? Okay. So first of all, the sales part. Sales normally represents the goods. Do you think goods are coming in or going out in this transaction?
Goods are not coming in or going out, but previously
Yes.
we had put purchase, right, for that.
Yeah. Yeah.
So now isn't it denoting that we kind of sold it because we're getting some money for it back? Does it?
No. Goods has
No, it doesn't.
nothing to
Oh,
do
okay.
with here. Goods has
Okay.
nothing to do with, because goods are not being dealt with here. So had that happened, then we would have received 1500 instead of 1,000. So we have a separate transaction with the insurance company who do the valuation, who see whether the fire was actually, you know, genuine or not, or are we trying to do any fraud to the insurance company, and accordingly they decide, which is totally different from purchase and sales. So it is a pure transaction with the insurance company. So it is not a purchase, not a sales, because goods are not being dealt with here. Goods are not coming in, goods are not going out. I'll delete that. Now I'll come to the insurance. It is actually correct if you are thinking about income. Do you think it is an income? Some income the company is earning?
Yes.
Yes, so because we thought earlier that, you know, we lost 1500, today suddenly we realize out of that at least 1,000 we are earning, getting back. So that's kind of income for today, isn't it? So
Yeah.
for naming that income, what do you think? I'll give you the options. Okay, one of the options is insurance income. One other option is loss by fire. What do you think should be the name of the income?
Insurance income only.
Okay, so I'll just tell you this. I try to confuse with that. So insurance income seems to be very genuine name, but what happens is right before this transaction, you recorded a loss of 1500, right? Now that you have received 1,000, do you think loss is 1500 now?
No, it has
It
reduced.
has come down, right? It has come down.
Yeah.
So instead of naming it insurance income, if we name it loss by fire, automatically that will get adjusted, right?
Yes, yes.
So that we will do. We will name it as loss by fire. So the loss by fire is what type of account then?
Income.
Nominal.
Nominal.
Okay,
Yes,
nominal.
income. We are saying yes. And insurance receivable, which is representing the insurance company. What type of account it is?
Personal.
Personal. Perfect. So here, let's see, is the loss by fire nominal is an income you said. So what are the rules? Debit.
Debit expenses, credit income.
Here it is an income, right? So I'll put it as credit. Now, insurance receivable, which is representing the insurance company. Are they the receiver or giver?
Giver.
No, they have not given yet. They have not given yet. That's why I said cash they have not given. Until now, they are the receiver. Receiver of what? Can somebody say?
Goods.
The premium or something that we pay, during
Yes, exactly. The premium payment is separate, but the kind of, the logic in which we pay the premium, which you can say the insurance, service, we say, we cannot really call it insurance service. Rather, we will say, he's the receiver of the money. We can say that he's the receiver of the money, or we can also put in the logic of, debit the debtor and credit the creditor. If you remember, there was an alternative, debit the debtor and credit the creditor. Here, now that we have determined that the insurance company is going to pay us money, meaning thereby he is the debtor as of today, right?
Yeah.
Yes.
Yeah, so we can put in that logic and say it is going to be debited, right? So what I'll enter is insurance receivable debit to loss by fire. Amount is 1,000. Make sense? Any doubt in the
Yes.
last transaction? Okay, I had this many entries in mind, and now I will go back to the discussion that we were yesterday. So I have actually taken up the next example instead of going with the same example that I did. What we have done until now is we have passed journal entries for all the adjustments, 4 adjustments. I think somebody picked it up. I wanted to deal with that only. So the reason for it, I'll tell. Right now only I'll tell. So we have seen the trial balance is prepared from the ledger and ledger is prepared from the journal. If in the question trial balance is given, then is it safe to say whatever is included in the trial balance, for that journal entry is already done, ledger is already done? Can I say that?
Yes.
Perfect. Now, however, anything you figure out after that, the trial balance, for that journal entry is not done, ledger is not done, right?
Right.
So of those transactions, whatever you figure out after you prepare the trial balance, for those transactions, no effect has been done to the trial balance, basically. So those type of transactions are called adjustments. So it often happens with the companies. I mean, and practically also, on the day when there is not a particular time that you can just prepare a trial balance. The process of whole preparation of financial statement starts, on a particular day, and it continues for weeks, for 2 weeks, 3 weeks, sometimes even more. And during that time, when you have finalized the trial balance, often it happens, new transactions come in. And some other things are also there, which come in after that. So those we call as adjustments. So for those adjustments, the difference is one of them I told about the time. These occur after you prepare the trial balance, which is exactly why trial balance does not have an effect in it. Other thing that I can link from this logic itself, if we have not recorded these in the trial balance, can I say that these will have dual effect in the profit and loss account and balance sheet? And if yes, can somebody elaborate that a little bit? What I said was this: can I say for the adjustments you will have a dual effect in the profit and loss account and balance sheet? Anyone? let me go back to that example in which we prepared the balance sheet earlier. If you remember this trial balance, small trial balance, in which we had cash, capital, purchases. Do you remember that? And we posted the cash to the asset side here, right? Because of the logic that cash is a real account, because it has a debit balance, so it is definitely an asset. We put it in the debit side, asset side. Did we put it anywhere else? Anyone? Did we put this amount anywhere else? You cannot think of, because we didn't. It's as simple as that. We did not put this amount anywhere else. It was just one time. So anything that is given in the trial balance has one effect. It is posted in at one place only. That is because journal entry ledger is already done. However, in the for those transactions which are adjustments, because the journal entry is not done, like we saw here, for this adjustment, we have this entry. Basically, I can say this adjustment is affecting interest receivable account and also interest account. So it is having two effects, right? Does that make sense? Anyone?
Yeah.
Yeah. So what I said, what I'm saying until now is I'm talking about the adjustments. One of the things that I told was adjustments. One of the difference of adjustment with trial balance is the timeline. So adjustments are the transactions which you find out after you prepare the trial balance, meaning thereby they don't have an effect on the trial balance until now. They did not have an effect on the trial balance until now. Other thing that I told was the adjustments will have two effects in the profit and loss account and balance sheet. The reason for that is simply the journal entry is not yet done. As simple as that. Having that said, let's go back to our question here. In this question, if you can see, we have all the types of accounts, then the adjustments are given. We have actually posted the entries already. We will see how to really go about it. And before going there, let me talk a little bit about closing stock. Let me introduce one concept. Okay, suppose we all of us together have a company, small company. We deal with simply, suppose we manufacture soap, some that soap for bathing on all. We get some raw material, we manufacture the soap and we sell it. Suppose we all of the purchase of the material, wages, labor, all of that cost amounted to 100 rupees. Very simple example. 100 rupees is our cost, everything included. Okay. And after incurring that much of cost, we produced 5 soaps. Out of those 5 soaps, suppose we sold 4. For how much of rupees? Rupees is, suppose I will say 150. So what I'm trying to say is we have a very small company and we deal with soap and our cost is 100 rupees. We sold, cost is for how many soaps we produced? 5. And we sold for the sale happened for 150 rupees for 4 soaps. The soap we had produced 5 and we sold 4. So we still have 1 soap with us. Is that clear? The question, the example? Anyone?
Yes.
Yeah. So again, repeating. So we manufactured 5 soaps. The whole cost amounted to 100 rupees. We sold 4 of them and for 150 rupees, and we are still left with 1 soap. My question to you is, how much of profit have we made? Simply logic, apply the logic. Don't think about accounts and all. Just tell me how much of profit you have made. Anyone? Just say whatever
We
is
have
coming.
made 10 rupees
Yes.
per soap.
No, total you say, not per soap. Total you say.
30.
30 you said, okay. Anyone else? Any other number? Or do you want me to repeat the question?
One soap is balanced. We still have it, right? We have not sold it.
Yeah. Anyone else, guys? Okay, I'll take it up, no problem. So the logic that I wanted to discuss is, often what happens is we see the cost is 100 and sell is 150. When we deduct this, we get profit of 50. We get profit of 50. However, we still have a soap, right? We still have a soap with us. What does that mean? That means the cost that is 100 is not the cost of 4 soaps that we have sold. If the cost is 100 for 5, what is the cost for 4? Can somebody say? I'll repeat that. If the cost is 100 for 5 soaps, what is the cost for 4 soaps?
80.
Exactly. So don't you think the 150 should be compared with 80 instead of 100? Anyone agrees with that? I'll repeat that. Don't you think the sell of 150 should be compared with 80 instead of 100? Because we have only sold 4, right?
Yes.
So what does that mean? The profit actually is 150 minus 80, which is 70. So you actually deducted 20. It had to be added because we still have the soap, right? So it increases our profit. But the logic, you got it before I said only. I give you that. So what I did until now is, when we have sold only 4 soaps out of 5, we still have 1 soap with us. Then what cost we have to compare the sales with or the revenue with depends on that. So out of that, we determine in what our actual cost is. Actual cost for the revenue that we have made is 80 instead of 100, because 20 we still have it. Does that make sense? So my logic of discussing this is, don't you want to know now, on the day that you're calculating the net profit for the company, don't you want to know how much of stock that you have with you? Does that make sense? Anyone?
Yes.
Yeah. So because of this logic only, the logic is simply what amount of cost should be compared with the revenue to calculate the profit. Because if we have stock with us, meaning that means whatever cost that we have incurred for that stock should not be included in our cost. That should be excluded. I hope that makes sense. Yeah. Okay.
There is
I'll
one
take that.
doubt.
Yeah, sure. Go ahead.
This 20, how can we add that? Because we have not sold that 1 soap yet, no? So we had not made any profit out of that. How can
We
we
have
add
not
that to 50?
added. We have not added it. We have actually deducted it from cost. We have not added. Ultimate effect is adding only. Ultimate effect is adding only. But if you see, we have not added to the profit. We have actually deducted from cost. Both mean the same thing, but the logic is different. Do you get that point? The deducting from cost makes sense to you. Does that make sense?
I'm still not clear. I don't know if others are clear on it.
No problem.
I don't want
I'll
to
repeat once more.
waste the time.
No
Maybe I'll
problem.
take it up later.
Yeah, we can discuss it afterwards as well. No problem. I'll just repeat that concept one more time. Okay. So if I have sold only 4 soaps, I should compare the cost of 4 soaps only to that, right? To calculate the profit. So for that reason, when we actually take the cost of 4 soaps only, in the process of doing that, we reduce the cost. Now, logically, mathematically, what happens ultimately is our profit is increasing. The reason is we have actually made that much of profit. We have actually sold only 4 soaps. We still have 1 more soap left with us. Why will we include the cost of that extra soap in comparing with the revenue at the time of calculating the profit and loss? So we exclude that, because of which our profit increases. And so which you can also put in a logic of whatever is getting deducted. If you decrease that, your ultimate value will increase, right? Suppose I will say A minus B, A minus B equals C. If I decrease the value of B, then C will increase, right? It's a simple mathematical equation, isn't it?
Yes.
If I decrease B,
yes,
C will increase. So here A is nothing but sales, B is nothing but cost, and C is nothing but profit. Now I'll delete all this. The reason I told is because we need the value of stock at the end of the year to determine an accurate amount of profit, which is exactly why this one is given. The closing stock. How to deduct, where to deduct, I'll tell afterwards when we start preparing. Let me quickly start with the preparation of balance sheet and profit and loss account, and we will wind up maybe at 9:15. I will not take more than that. Whatever we can complete today, we will. After that, we'll next time we'll meet, we'll continue from there. Now that I have introduced all of this, let me come to balance sheet preparation, balance sheet and profit and loss. Profit and, okay, 10 minutes it'll over. I got the thingy, profit and loss. And let me say trading and profit and loss account. Then let me say balance sheet. So trading and profit and loss has a debit side and credit side. And there is a line in between. And let me, okay. Now trading and profit and loss account, balance sheet has on one side liabilities, on one other side assets. And similarly, so let me quickly go to the question. And the thing that I told you guys to do, I'm pretty sure that you didn't get any time to do it. So I'll start with there itself to without considering the adjustments, preparing the profit and loss and balance sheet. I'll do that first. So 17th question we are dealing with. First of all, the purchases. Do you think purchases should go to trading profit and loss or balance sheet?
Trading profit and loss.
Yes, exactly. Trading and profit and loss. Which side? Is it the expense? Is it an income?
Purchase is an expense.
Yes. So I'll put it in the debit side, right? To purchases.
Debit
Amount
side,
is 162,505. Yeah. Now let's go to the next item. Debtors. First question, is it a profit and loss item or balance sheet item?
Balance sheet.
Yes. If others are finding it a little difficult, let me remind, we had discussed this concept where how to determine where should it go. The chart is here. Let me just quickly find it out. Yeah, I got it. This is the one. We find out whether it's a nominal account or real or personal account. That way we can determine whether it goes to the profit and loss account and balance sheet. Then whether it will be an asset or liability, we decide the debit balance, credit balance, and accordingly we can decide. Also from the name of it, now that we have discussed things so many times, from the name of it itself, we can determine whether it's an expense, whether it's an income, whether it's an asset or liability. Now quickly going to, now that we have determined the debtors or asset, I'll just put it in the here. Debtors. The amount is 50,200. Next item, please. Opening stock. Okay, before you say,
balance
let
sheet.
me. No. So what happens is, okay. The opening stock part, let me just pause it there, skip it there, and we will discuss it afterwards. I'll just remember that. I have certain things to say, but if I introduce it right now, it'll take a little bit of time. So let me skip that for the next time that we discuss, next session that we have. Yeah, let's skip that for now. Let's go to wages. Wages.
Trading and PL.
Perfect. To wages, the amount is 23,137. Salaries.
That also trading and PL.
Perfect.
Expense.
Perfect. Expense only, and the amount is 5575. Furniture.
Asset balance sheet.
Perfect. Furniture. Amount is 7250. Next, postage. Postage is nothing but, you know, when you post something, send something through Blue Dart or other courier services, whatever you pay for that, you know, for sending those postage, that is called postage. Yeah.
It's also an expense.
Expense only. Yes,
Trading
you're
and
right.
PL.
You're right. You're right. Which is 4226. Now, power. Power is nothing but electricity charges.
Yeah, that also is expense. Trading and PL.
Perfect. Perfect. Yeah. To power, which is 1350. Then trade expenses. The name itself says expenses, so I'm putting it here only. To trade expenses. Now you might ask me, why am I putting certain things top, certain things down? The reason for that you also know, if you remember the time when we discussed about factory expenses and that. Now how to segregate the factory expenses from profit and loss, I will discuss that on the next time that we meet. That is a discussion that is there pending for us. Bad debts. We have discussed so much
Trading
about
and
it.
profit and loss.
Yes, expense only. Perfect.
Yeah.
525. Loan to Ram. So we have given a loan to Ram. We have given a loan.
Income, right?
Loan cannot be income, right? Loan. You have given a loan to Ram. That's an asset,
Liability.
right?
Asset.
Asset.
Yeah. Asset.
Because you have
We
given.
have given.
You have
Correct.
given. Yes, exactly.
Correct. Yes.
So I'll put it here. Loan to Ram. Also focus on the fact that I'm not, when I'm entering in the balance sheet, I'm not putting to or buy. However, in trading and profit and loss account, I'm putting to or buy. That is one of the difference between the balance sheet and profit and loss account. Now, cash, 10,000 rupees. Where should I put?
Asset balance
Perfect.
sheet.
Balance sheet, cash, asset side. Yes, perfect. Next item, please. Drawings. If I'll just remind. Yesterday I told, you know, drawings is nothing but what owners takes from the business, and I had told, you know, capital is something that the business owes to the owner, and drawings is something that the business has given to the owner, that it has receivable. So if capital is liability, drawings is exactly opposite. Do you remember the discussion?
Yes.
Perfect. So what should I do? I should put it as
Balance sheet.
balance sheet only, item, asset only. Can I do this? Instead of putting asset, can I put it here in a negative value? I'll discuss it afterwards, but instead of putting it as an asset, I can put it as a negative value liability. Can I do that? Simple mathematical
We can
thing,
put
no?
in the other section of.
Yeah, on the asset side also, and as a negative value also.
Yeah, but both are same effect.
Both are same effect. That's what I'm focusing on. Both are same effect. That's why I'm putting only, nothing other than that. So I'll discuss it next time. But just for a simple mathematical equation, if I put it in the asset side or as a negative value in the liability side, both sides will be together. I mean the same. The total value will be same. Now let's very quickly. Okay, we have a lot of other items. Let's go to sales now. Sales. Where should I put?
Trading.
Yes. 252,600. Let me stop there. It's all right. Wherever you are there, we will continue from there itself. No problem. And we will continue from here. I mean, final accounts is a big part. It takes a lot of time, and though that's no problem. as much as time it takes. As long as it is clear to you guys, that's more important. I mean, we will continue with from cells the next time that we're meeting, and then I'll also tell you about there are certain other things that I have to tell about the adjustments. We have already actually done 90% of adjustments. Now, how to really link it to the trading and balance sheet, that only I'll have to tell. These entries that we passed is everything. These entries that we passed is everything for the adjustments. So it is going to be very easy now that we have already determined the accounts. That's all. Any doubts, guys, until now, until this point? Okay, then that's all for today, guys. Thank you very much. I'll tell you if any other day it is possible for us to join. Like today itself, I'll tell you in the morning and we can join.
Sure. I mean, take your own time whenever you're free.
Yeah. Cool. Thank you, guys, then. Thank you so much. Good night.
Thank you.
Thank you.
Thanks a lot, Dheeraj.
Thank you,
Yeah,
Dheeraj.
sure.
Thank you.
Thank you.
Yeah.